Hello everyone. In this session, we're going to learn how to tax on the death on the lifetime transfer. It's a very interesting topic to learn the inheritance tax, and we're going to look at what happened if the person is died within 7 years after giving any gift or any gift that is prior to 7 years. So obviously, some of the gift will be exempted if it is more than 7 years, and some gift will not be exempted if the person die within 7 years after the gift. Now, this is a little bit tricky for the pet and for the CLT. So we're going to learn details from this question. Now, the first thing we have to remember that is very important, step number one, that is PET. The PET is a potential exempt transfer. The reason we called it potential exempt transfer because we don't know. It might be fully exempt, it might not be. Depends how many years the person survived after the date they give the gift. For example, if the person give the gift to anyone on 2010, and if the person survive at least 7 years, so up to 2017, and if he die after, so that will be fully exempted. So even the person will die, he don't have to pay any tax on that amount. But obviously, like if the person is die, normally the tax will be payable who received the gift. So this is the first thing you have to remember. Pet could be exempted if the person survive more than 7 years from the date of the gift. If the person survived less than 7 years, we need to look at how many years the person survived. If it is more than 3 years and less than 7 years, then there will be some relief, and we call it TAPA relief. So they'll get some relief if the person survive at least 3 years and die maybe within 7 years. Now, the next one is a CLT. CLT is a lifetime chargeable transfer. Now, the main interesting thing here between these two is CLT will never be exempted. It will never be exempted. So regardless how many years the person survived after the gift, it will never be exempted. It can be only covered by nil rate band, NRB. Nil rate band. Very careful, this one. That's why we called it CLT, chargeable lifetime transfer. So it is not exempted even the person survived 10 years, but it will be always taxable. And of course, sometimes the question say no lifetime tax. So they didn't pay any tax in lifetime. Sometimes the question can say like, yes, they pay some tax. For example, here they said the lifetime tax paid by the trustee, 15,000. So it is depends what the question said, but we have to know CLT is never exempted. It will be always covered by the nil rate band, that is 325,000. So if the CLT is more than that, obviously it will not cover by the nil rate band, and the remaining amount will be taxable. So it's very important to understand. The next thing is the nil rate band is always reused for 7 years. So that means if we have a CLT or if we have any gift, we always check from the date of the gift, previous 7 years, is there any chargeable gift we give? Now, it is very important to understand that. So sometimes some students think like 325,000, the nil rate band for the lifetime. Remember that it is not lifetime. This 325,000 nil rate band for every 7 years. So every 7 years, you will have another 325,000, the nil rate band. It will regain the nil rate band. So it is very important to understand that. So let's try to understand our story here. It says, Boris K. died on 15 September. So he died on 15 September 2021. Very important, this date. the date of the date when the person is died, because we have to always calculate 7 years from that day. You should establish he has made the following gift during the lifetime. So he makes some gift during the lifetime. So on 24th of July 2010 CLT, so you have a chargeable lifetime transfer. Gross chargeable transfer 300,000, no lifetime tax. So there is no lifetime tax is paid. If there is no lifetime tax is paid, so if the person is died and if this amount become chargeable, we have to pay the full tax. If the some tax is paid, then that amount will be reduced from the total tax payable. So this is 2010 and the person is died 2021. So it's look like more than 7 years, but remember CLT have no relationship with the 7 years exemption, because CLT will never be fully exempted. It will be only covered by the nil rate band. So within 7 years, the nil rate band will be regained, but if the transfer is more than nil rate band, the remaining amount will be always taxable. Then 1st of August 2014, potential exempt transfer. This one can be fully exempted if the person is survived from the day he give the gift, from that day if he survives 7 years. So if you look at this one, on 1st of August 2014 till September 2021. So we need to count how many years we have here. So if you count from 15, 16, 17, 18, 19, 20, so 21 August, we have 7 years. So the person is survived more than 7 years. So obviously that will be completely exempted. So this one is fully exempted. So we really don't have to consider this one at all. This is fully exempted because the person is survived 7 years from the day of the gift. So only for the pet we calculate that. So you can see this one. They said the gift made on 1st of August 2014 is paid. It is fully exempted. That's why they cross it. So this is not chargeable on death at all because he died after 7 years. Now the next one we have here, we can see that is 13th of January 2016, pet. Again the pet. So as soon as we see the pet, we have to check how many years from the date of the gift. So from 16 to 21 is a look like less than 7 years. So if we count 17, 18, 19, 20, 21. So here we can see it is more than 5 years, but less than 6 years. So more than 5 years and less than 6 years. So in this case, the person will get the TAPA relief because he survived more than 3 years, but less than 7 years. So the TAPA relief will be depend how many years he survived. So more than 5 years, less than 6 years will give him the TAPA relief option of 60%. So 60%, he'll get the relief. So how much is the tax? From there, we can claim the relief 60%. And 23rd of July 2018, again CLT, we can see this is definitely within 7 years. But for the CLT, we really don't have to worry about the exemption. We only need to think about the nil rate band, 400,000. And lifetime tax paid by the trustee, 15,000. So the person paid some tax as well. Now remember that if any tax is paid, it will be deducted from the total tax payable. So when you're going to calculate any tax on this 400,000, and we're going to minus this one, 15,000, also if there are any TAPA relief. So from 2018 July to 15th of September 2021. So 19, 20, 21, 3 years, more than 3 years, but less than 4 years. So more than 3 years, but less than 4 years. So here he will get 20% of the TAPA relief. 20% of TAPA relief. So this is our basic story to understand the situation. Now, if you look at the first one, The first one, it is first we look at the pet. So this is more than 7 years. So we say it is exempted. We don't have to do anything with that. So you completely ignore that. Now, the first gift that will be taxable on death, that is 13th of January, because it is more than 5 years and less than 6 years. So value of the gift was 100,000. So gift value is 100,000. Now, from this 100,000, how much tax we need to pay is depends how much nil rate band we have available. So let's have a look. From the gift, we need to look at 7 years back. So give the gift 13th of January, that is 100,000. So 13th of January. From 13th of January, we need to go back 7 years. So if you go back 7 years, that gives me 14 January 2009. So within these 7 years, from the day of the gift and 7 years back, we have a nil rate band 325,000. So we need to check within these 7 years from the day of the gift. Remember that 13th of January, 16. From that day, previous 7 years, is there any gift we make? So the first one we can see, this is 2000, of course, 9. So this gift, 24th of July, come within this period, and August 2014 also come this period, but we're not going to consider that because it is completely exempted because this person is died after 7 years. So you don't have to really worry about that. So only this one, 300,000, because it's a CLT, it's not pet. If it is pet, if it is pet, you also need to ignore that, but it is a CLT. So this one is made between this period from 13 of the January 2016. Before 7 years is 14 of January 2009. So last 7 years, there is only one gift, that is CLT, and that is our 300,000. So if we look at that 300,000, of course, it will tell me, is there any other gift we make from there? So no, that's the only thing we can see between this period, that is only 300,000. So our nil rate band for the 7 years period is 325,000. So 325,000 is the nil rate band. So from the 325,000 nil rate band, we need to minus any gift we made the last 7 years that is chargeable. Remember that, not the pet, chargeable. So 300,000 was chargeable because CLT is never exempted. Remember that. CLT is never exempted. We don't consider the pet because it is more than 7 years. Now, what will happen? We find the difference. So only we have a remaining nil rate band, that is 25,000. So from the nil rate band, we have remaining 25,000. That means the tax will be payable on 75,000. The tax will be payable on 75,000. Now we're going to calculate how much is the tax on the 75%. Remember, if the person is died, the tax rate will be 40%. Tax rate will be 40%. So we said 75,000 times 40%, and that will give us 30,000. So 30,000 will be the tax due on the gift we make on 13th of January for 100,000. But remember, we have some relief, taper relief. 60% we're not going to pay because of the taper relief. So you're going to say less taper relief. So times 60%. So 18,000 we're not going to pay. That is 60% of the total tax. And that gives me 12,000 tax payable. 12,000 tax. Now this one is payable who received the gift. Who gave the gift? That person is already died. So who received the gift, he need to pay this tax. So this is the first gift that is taxable on death, that is 100,000. The next one we can see here, 23rd of July 2018, we have a CLT that is 400,000. So 400,000 was another CLT. And the person is died within 4 years, so more than 3 years, so 20% taper relief will get. Now, again, I have to check from the day of the gift 7 years back. So the day of the gift was 23rd of July 2018. So from this day, we have to look back 7 years. And we need to see how many gifts we give within 7 years. So if you look at from this day, and if you go back 7 years, so 7 years become 24th of July 2011. So during this time, how many gifts I give? Now, 2010 is obviously is before 2011, within more than 7 years. Every gift we go back 7 years. Remember that. Every gift, not from the date he died, but from every single gift he made from that day 7 years back. So from that day 7 years back, this is up to 2011 July. So if it is 2011 July, that means we ignore the 2010. And this is completely PET is completely exempted. So he died after 7 years. So you don't have to worry about the PET. Now this one, 2016 one is come between this period. So 100,000 we make in last 7 years. So you're going to say, okay, that will reduce my nil rate band. So it's a nil rate band. Normally it is 325,000 for every 7 years. Then minus the 100,000. And that gives me the remaining nil rate band 225. So you minus this one from 400,000 minus 225,000. And that gives me 175,000. So the tax will be payable in 175,000 tax payable. Now from here, we have to consider two things. We have to see how much is the tax. So the tax will be 40%. So times 40%, that will give us 70,000 tax. And from here, this is my tax liability. From here, you have to minus the TAPR relief. That is 20% because he survived more than 3 years. Times 20%, so 14,000 I'll get relief. And also, he already pays some tax on the lifetime. So 15,000 will be also reduced. So we have to minus 70,000 minus 14,000 minus 15,000. That gives me 41,000. So this is the tax payable for our next gift, that is 400,000 CLT. So the total tax you can see. So we have payable here 12,000 from the 100,000 PET and the 41,000 for the 400,000 CLT. So this will be the total tax payable on his death, and the tax will be paid by the person who received that gift. Remember that this is a very detailed understanding of the inheritance tax. So when the person is died, and how we consider the lifetime transfer. So you have to be a little bit careful between the CLT and the PET. And one more thing you have to consider, always go back 7 years from the day of each gift. Do not consider 7 years from the day he died, because that's only for the PET. So obviously, every time when you see there's a CLT, you have to always go back from the day he made the gift, and always you need to check the nil rate band always a regain within 7 years, that is 325,000. So every time you have to go back for the CLT for previous 7 years. Any lifetime transfer, you have to be remove or reduce from the nil rate band. So any lifetime transfer will reduce the nil rate band. But if there is a PET and if the person is survived more than 7 years after the gift, you always ignore that because it is fully exempted. I hope you understand obviously about how it works. But as I said, you need a little bit more practice because you have to understand the whole concept. How does it work? Now, if you are doing AAT level 4, and obviously if this is your topic, remember that in the exam, they will not ask you to calculate how much tax is payable, but they will ask you to how does it work. So it is very important to understand the difference between the PET and the CLT, and how the tax will work, and how we reduce the nil rate band. So very important. So you need to understand everything. One more thing, if the question said he'll leave any estate on his death, and obviously if the estate is part of the household, that time we have to consider the residential nil rate band as well. So you need to be consider that as well. Other than there is a story, if someone have a lifetime transfer and if the person is died, that's how we consider all the PET and CLT and how much tax is payable on his death if the person is died within 7 years. And obviously any CLT never ever exempted. It will always cover by the nil rate band. Thank you very much for watching.